Good morning, students. How are you all? Hope you all are good. Okay. In accountancy, shall we learn um, that next chapter, bank reconciliation statement. Okay. We have completed 7 chapters. Now the 8th one, bank reconciliation statement. Before starting this lesson, we should learn about the bank passbook, bank transactions. Here it is somewhat connected with the 7th chapter, the cash book. Okay, because the 3-column cash book, we are preparing bank and cash column. Here bank debit side and on the credit side 2 columns will be there. That balance shows the bank balance. Okay, the bank balance. So how much we have, that bank column shows the bank balance in the bank. So when we check what is the bank book that we have, bank account, that is called the bank passbook. That means the customer's account, our account in the bank we have. For that we have one passbook, isn't it? So we have to check this cash balance, that balance in the bank column of the cash book and the bank passbook. Okay, and it will be compared with the bank passbook or the bank statement. We can get a statement from the bank showing our account. Okay, or 5 days, 10 days or 6 month statement. If we ask, they will provide us. They will charge some amount as charges. So we can compare on the particular date, because we prepare the cash book at the date of that end of the financial year. So the same day, if we have the we have to check the bank passbook balance also. Okay, cash book balance and the bank passbook balance. Okay, here cash book balance and bank passbook balance. If they both are same, then there is no problem. But sometimes it will not match. The bank passbook balance will be different and that cash book balance will be different. Okay, it may not be same. Only then we will have to prepare one statement, bank reconciliation statement. There we need to show the difference amount with the reasons. Why? Okay, we have to show the reasons. With the reasons, we need to write the difference amount. Okay, so before this one, again we need to know about the bank transactions. Something we need to know for this lesson, because what is their passbook, that one account we are opening. For that they give one passbook with the same signature of the banker, isn't it? And we can open savings account, then fixed deposit account. Many accounts we can open in one. Business people, because we are learning this one related to the business people, business concerns. So business concerns can open a special account that is called current account. Okay, all the account that we open, ordinary people, that they are the savings bank account. Okay, savings bank account. Then if we have deposited a large amount in fixed deposit, that is called fixed deposit account. Savings deposit, fixed deposit account. Okay, and for the business people, they will allow them to open one current account. This current account holders, they have some special privileges. One special privilege is that they can withdraw more amount than what is available in their account. Understood? But if we have the savings bank account or a fixed deposit account, we can withdraw the amount for that within the available deposit amount. Okay, if we have deposited fixed deposit okay, 1 lakh or 5 lakhs, only that 5 lakhs we can withdraw from the bank. Okay, they may not allow any even a single paisa above that available amount, okay, our balance amount. But here that savings bank account also the same thing, isn't it? Even they may not allow us to withdraw the full amount, 500 or 1000 will be the margin amount. Leaving that amount only we are allowed to withdraw the amount. But only the current account holders are allowed to withdraw more amount than what is available in their account. Okay, that is called overdraft. Withdrawing more amount, overdraft, or we call it as bank overdraft. Okay, in balance sheet you might have not, we have not learned that one, isn't it? So this will be liability, it will be available on the liability side of the balance sheet. Okay, this is called bank overdraft. Okay, whether it is favorable balance or unfavorable balance, we can say it is an unfavorable balance. Whether it is favorable, no, we need to pay one charges also for this one. The bank will charge monthly or half yearly, okay, for the amount that they have given more than what is available in our account. Okay, that is called bank overdraft. Here again we need to know one more thing. In the cash book we have two column cash book, a triple column cash book, isn't it? Cash column and bank column. Here also cash and bank. We know this cash column has always debit balance, that means to balance brought down. Okay, here carry down, cash column. Okay, but this bank column usually we should have debit balance only. Okay, debit balance means here we have more amount, here less amount, so we can write here. Okay, so then debit balance means more debit side total, because all these are receipts, all these are payments, isn't it? So here we cannot have unfavorable balance in the cash book. If we have debit balance, then that is called favorable balance. Okay, if we have brought down on the credit side, cash we never have, sometimes we will have on the bank column. If we have the credit balance and for bank column, then that is called unfavorable balance, negative balance. Whether we will have negative balance in the cash, no. If there is cash only, we can spend. Otherwise, we cannot spend, isn't it? We may not do any payment. We will stop the payment if we do not have cash. But bank, even if we do not have balance, we are allowed to withdraw more amount. Okay, so we can get the negative balance, that is called unfavorable balance. Understand? So credit balance we have. They may ask for one word, whether the cash book, cash column will have debit or credit balance. No, only debit balance. But another question, whether the bank column in the cash book can have debit balance and or credit balance. Yes, because the bank column shows that amount, that our account in the bank, isn't it? So we are allowed, business people are allowed to withdraw more amount than what is available in their accounts. So we can have unfavorable balance. Okay, so all this knowledge you should have about the bank statement. Okay, so we need to compare this balance. Which balance? This bank balance with the bank statement. Okay, if this one with the, it will be compared with what? Bank statement or bank passbook. Then if it is same, that means no problem. But if there is a difference of amount, here we have, then what about passbook, you know? passbook. Here we balance them either monthly, isn't it? But this passbook is balanced. That means the bank statement. It is balanced after each and every transaction. You might have seen the passbook. If your family members, your parents have the passbook, you open and check every day after each transaction. There they will enter the balance amount. How much balance we have, we can find out. Okay. But here in the cash book only at the end of the month only we will come to know the balance amount. Okay. So here when what we do, receipt we are debiting. Here in the passbook it is like a statement only. Okay. They will deposit, then withdrawal, then balance. Okay. Here they will, this one is credit, this one debit, withdrawal. Why? Why they are crediting? Here we can say for the banker, it is maintained by the bank, isn't it? So if we deposit more, why they are crediting? The customer is called the creditor for them, because they need to pay that much amount to the customer, isn't it? Customer means the business people. Then if the business people withdraw that amount, this balance is getting reduced. Okay, the deposits, the balance will get increased, and if we withdraw, the amount get reduced. Okay. So here, why they are crediting the deposit? Here we are debiting the deposit. Okay, because this one it increase our balance. Why they debit? Why they credit the deposit? Because for them they become their customers. Customers are the creditors. That is why they are crediting. They from the viewpoint of the bank only they are entering. Their point of view. Okay, here we are entering from the viewpoint of the business. Here they are with the viewpoint of the bank they are entering. For the bank, the customer is creditor. That is why they are credit. Okay, you might have understood. Now, we will learn the difference between bank column of the cash book and bank statement. One difference is given, that I will just explain. Okay, difference. Differences between cash book, that means bank column of the cash book, and passbook. Passbook means bank statement. Okay, cash book, here bank column of the cash book. Cash column we do not worry about, but this bank column of the cash book only we have to compare with the bank statement or passbook. Okay, bank passbook. Here, who is preparing the bank column of the cash book? The business concern, isn't it? It is prepared by the business concern, maybe the cashier, isn't it? But who will prepare the passbook? It will be prepared by the banker, by the bank. The bank will prepare the passbook, isn't it? Then where we will enter the deposit, we will enter all the deposits on the, what I have explained to you only. Okay, we will enter all the deposits on the debit side of the bank column cash book, and here we will enter on the credit side. Okay, cash deposits will be entered on the credit column. Then opposite, cash withdrawal will be entered on the credit side of the cash book. Their withdrawals will be debited by the bank. Okay. Then when we deposit, no, check deposit, when we are entering on the date of deposit, we are entering on the cash book, isn't it? Once we have deposited the check into the bank, the same day we are depositing, but we are entering. But when they will enter, the same day they never enter. Once they receive the check, once it has got realization or collected, they will send that check to the uh, that another bank for collection. Once it got collection only, they will enter. Okay, that means the realization, after realization of the check only, the bank will enter as the deposit. Okay, check deposits. But when we are entering on the date of depositing the check in the bank, we are entering in our cash book. Okay, in the same way that check issued, we are crediting in the cash book, isn't it? By bank column, where as soon as when we issue the check. But when they are debiting our bank account, when they make the payment, because that check never goes the same day to our bank. Okay, we are issuing the check to our uh, creditors, and that will be sent to their bank. From their bank it has to come to our bank for collection, then only they will debit that amount. Okay, so if the checks issued by the customers, okay, once the payment is made only, they will enter in our passbook. Okay, then any collections or payments made by the bank, we can give some instruction, that also you should know. Okay, um, any many payments or collection means we can say the dividend can be received from some companies, or payments, payment, that electricity bill or insurance premium, the bank can do as per the instructions of the customers. Okay, if we that for business people, okay, if the bank is asked to do some service, they will charge some amount as the bank charges, service charges. Okay, but the bank will do when they are entering, once they receive the amount or once they make the payment, they will enter in the passbook. But we may not know on which date they are making the payment or they are collecting the cash. But when we will enter these transactions, once we receive the bank statement from the bank or bank passbook, when we see the bank passbook only we enter the transaction. So that is why the date is different, isn't it? Then the balancing. When we do the balancing of cash book at the end of the month or week or anyone, okay, any specific period will be there. At the end of a specific period only we balance the cash book. But the balancing the passbook is done daily. Okay, not daily, at the end of each transaction. At the end of each transaction, the bank passbook will be balanced. Okay, now we have learned some of the differences. I will mark and give you. Then the next statement, bank reconciliation statement, we will learn the next class. Okay, students, I will mark and give one or two question answers. What is meant by bank overdraft? Okay. Bank overdraft. One side heading is there, bank overdraft. One side heading. Here, when the balance is not having sufficient money in its bank account, when the business, it can borrow money from the bank. As a result of this, amount is overdrawn from bank. It is called bank overdraft. You write one sentence. It is called bank overdraft. Okay, learn this answer. What is bank reconciliation statement? That we have not studied. Okay. Then read this lesson fully. Not lesson, what I have taught you. The bank statement or bank passbook, then 2 pages, around 3 pages, up to differences whether they have asked us a question. No. Okay. So you learn up to the differences. Okay, students. Only then you can understand this one, otherwise I can teach you more also, but you may not understand it clearly. Okay, this bank transactions you should be able to understand. So read this lesson and listen to my video once again if you don't understand, and try to understand it and read the full portion that I have taught you. Okay, then only you will understand the remaining things, but it is very simple. So only 4 or 5 items will be given. That question is whether you need to add or deduct. Very simple, but you can write that one if you understand this one very clearly. For this one only I am telling you, you read the lesson carefully and try to understand what is given there. Then only you will be able to understand what I am going to teach you in the future classes. Okay, students, thank you very much.